This is the Friday, February 12th, 2016 version of the Market Plus segment. Joining us now is Angie Setzer. Angie, welcome back.
Hi, thanks for having me.
We are excited to have you. Good discussion on the program.
Yeah.
A lot of questions, surprisingly, from Twitter.
I don't know why.
Angie Setzer. She is, for those of you that don't follow Twitter, Angie is very well known, multiple thousands of followers.
Yeah.
Trusted resource.
It's like being the best dressed person in Walmart. I'm a celebrity on Twitter.
Well, we've got a question here from you from
Yeah.
Twitter. This is at Nicole Stecklin. She is wondering, the CPC, Climate Prediction Center, says La Nina might be a factor by this fall. Would that be too late to help corn and bean prices?
At this point, yeah, if La Nina comes in and is a factor this fall, we have seen a lot of forecasts come out, or some forecasts come out, that, are basically hinging on La Nina coming in and being a powerhouse factor end of May, June. CPC isn't really necessarily jumping on that bandwagon. The one thing that's really interesting is if you look at like 83 and 98, which are the analog years that everyone kind of keeps going back to, where we're starting right now from an El Nino standpoint for Jan Feb is a little bit higher than where we were at those years. So it means that the El Nino is a little bit stronger than what we saw. But the billion-dollar question, when it comes down to it, is going to be how quickly does that break down and then transition? Because it's not a flip of a switch. We're not going to go...
It can be in neutral for months.
Yes. And so that's the big question is, how quickly do we break down? Because an El Nino spring in the western Corn Belt and in the southern plains and in areas like that would result in a lot more active weather pattern, meaning more rainfall and some cooler temperatures, which would limit or have an impact when it comes down to it on corn plantings. It would not necessarily be bullish for soybeans because we discovered this past year that soybeans can be planted in the southern Corn Belt areas as late as July, which if you would have told me that, I'd have called you a liar, honestly. Yeah. But Missouri did manage to produce a decent crop with August, September weather. So that's going to be the big thing is how quickly does that transition? At this point in time, would I bet the farm on La Nina kicking into gear in June and causing significant production issues? No. And it's also important to remember that El Nino and La Nina are driving factors to what you experience from a climate standpoint, but they're not the only. So they don't, necessarily determine where the jet stream moves, where the weather pattern moves. And you could see with El Nino this past year, everyone was talking about the, super El Nino and the strongest El Nino on record. And we really didn't notice any sort of significant change in our weather pattern until midwinter.
True.
So there are a lot of questions. There are way more questions right now than answers, and nothing against the meteorologists of the world, but they struggle to tell us what next Thursday is going to look like. I really struggle in buying anything they tell me from a long-term
Don't build
standpoint.
a marketing plan.
Yes, do not make a weather forecast.
La
Yes, exactly. Let's lay off the hopium when it comes to the bad stuff on the weather side.
All right, well, we've got a question here, another Twitter question. This is from at Schwab Matt on Twitter. Given the current supply and carryover of old crop, both beans and corn, and an estimated increase of acres this year into those crops, what price level should we begin making new crop sales? Let's talk corn first.
Corn first, we've started, for some of my guys that know where they're at from a break-even standpoint. So I hate to preface the question with beating the same drum, but I'm gonna. You need to know where you're profitable. I mean, you can't just pick a point on the board and say, well, this looks good, let's throw it out there and see what happens. But for my guys that know where their profitability is and know what they need to do from a harvest time movement and things like that, we have started putting some incremental sales, which I like the reverse pyramid. So we start small and build percentage as we go up. We have started with some very small sales at that 390, 395 mark.
Upper end of the existing range.
Yes, upper end of the existing range. We're using futures only contracts at this point in time with the intent that if the market does continue to rally, we're going to continue to scale sell, and these lower price contracts will be rolled out to the deferred months. So if you can gain 20, 25 cents of spread from the D's to the July, you turn your 390 into a 405 and you're above $4 from a cash standpoint based on our basis levels we're looking at. So there's nothing wrong with getting started at that level if you know you're profitable and are prepared to trade, basically the spreads and have those orders in. For my guys that need to be above that $4 mark, we are looking out more towards the 405, 410. And then basically we're looking at 10 to 15 cent incremental sales from there. I do think we will have an opportunity again towards that 435, 440 on the D's. I know that's kind of a call, which I don't like to throw price predictions out there,
Sure.
but I do think that at some point in time you will have an opportunity to sell those and that you'll want to take advantage of it. But to get started somewhere and then have a plan in place is what you need to do on that.
Beans, you're still going to
Nine.
watch the ups? None. No
Nine,
sale.
no,
Nine.
not nine,
Okay.
not foreign. No, we're
not German.
Yeah,
no.
we're not German today.
$9. How aggressive are you at $9?
Again, it goes back to how profitable you are, what you're looking at from an APH standpoint, et cetera. But beans, to me, I cannot come up with a bullish scenario at this point in time. And I'm Pollyanna optimism. I mean, I really am. Follow me on Twitter, you'll see. But I mean, I'm a cheerleader when it comes to the market. But when we come down to it, the South American crop is going to be a big albatross around our neck. The one thing that's not really discussed a whole lot is China is sitting on the significant portion of stocks with wheat and corn, 38 and 53% respectively. Beans are sitting in the hands of Argentina and Brazil. Argentina carryout is upwards of 1 billion bushel. Brazil is over 700 and some odd million bushels. That's a lot of beans. We are going to have anywhere from 4 to 450 million bushel, depending. The likelihood of seeing that cut a whole bunch without some sort of surprising stocks number coming in, which isn't out of the question, but that's kind of like hanging your hat on, 2012 drought happening again. And then we go forward and people are going to plant beans. Your cost is lower, your risk is a little bit lower. Beans don't have that variable yield really when it comes down to it. A poor bean crop's 45, a good bean crop's 48 or whatever, depending on where you're at. So when it comes down to it, there's a lot of ways that we could see bean carryout etch up into that 550, 600 million bushel. So to me, in corn, we may have established somewhat of a floor similar to wheat. But with beans, I think we could be more like corn circa 2014 into 2015, where we have to...
We're finding a bottom.
Yeah. And so to be aggressive, $9, $9.25, $9.50, I don't think you're going to be sad with those kind of sales. And the thing is that there's enough carry in the market, or at least the market's trading at parity between NOV 16 and NOV 17, that I have some of my guys starting to look at NOV 17 hedges in addition with their NOV 16.
Good point. Would you be selling 17 corn at all if you can get up into those fours?
If you can get up into the fours and you're making money, I don't think I really, unless barring some significant issue that we see develop, which the market, that's why God invented calls. You have a way to ensure your upside risk. And so, yeah, if you can make money on it,
Okay.
if you look at it and you think to yourself, I'm happy with that, selling that right now, then why not look ahead? Now, don't get too far ahead of yourself and end up sad down the road. But
and even if you're not happy with the prices, if the banker's happy with the prices, might be the
and if mama's
criteria.
happy,
Right?
That's 90% of the guys on here will be like, yes, if mama's happy, I am happy. So make sure that you keep that in mind too.
Keep everybody happy. Now, we do have a question from Phil in Ontario, Canada. And Angie, for those of you who aren't familiar with her, she works at an elevator in Michigan, central Michigan, and lives in Iowa. So she has experience with both the Eastern and Western Corn Belt. So Phil is curious, what are the big differences other than Ontario corn imports coming in between the Iowa and the Eastern Corn Belt cash markets?
Cash market wise, to me, what I've seen, the biggest difference is in Michigan, a lot of farmers keep their grain to home. So, and there are guys in Iowa that do the same thing. There's some pretty solid bin setups out here. I mean, I'm not saying that there aren't. But from what I've seen, a lot of farmers will, in the Western Belt especially, are okay with paying commercial storage, doing different things of that nature, where the Michigan farmer or the Eastern Corn Belt farmer, in a lot of ways, has learned how to trade like an elevator. So there are a lot of times that I would love to introduce some of that, or I do introduce some of those concepts to the Western Corn Belt farmer, in the sense that you control your destiny when you control your storage. And in that sense, that could be as simple as you might deliver it at harvest time, but instead of putting it on DP, you cash that corn out ahead of time and then look to buy some calls or do something different. So there are some really interesting differences. The other thing is out here you have so much demand. And I mean, you're big producers, that's for sure. But you have so much more demand. You can't throw a rock without hitting an ethanol plant out here, which is great. But then you also have the big impact. It's kind of like our Ontario, because in Michigan, we struggle with the currency conversion. Ontario coming in, like Phil mentioned. But out here you have your Minnesota, South Dakota, where you have lesser demand and more crops right now. So there's a lot of really interesting changes, and I hate to use blanket statements and say, well, out here it's this and out there it's that. But from the biggest thing that I've seen is the farmer a lot of times delivers right at harvest time to his elevator and then relies on them to take care of him from a marketing standpoint, where in the eastern side, it's very cutthroat at harvest now because everyone's built so much storage anymore that it's almost competitive. It almost doesn't pay to have the storage in the eastern belt. If you could pick it up and teleport it out here for some farmers, it may not hurt.
Okay. Well, now we do have, we didn't get a chance to discuss the cotton market on the show. It was down another $1 this week. Downward trend is in place. Cotton, any reason to move up here?
I don't see one. China's still sitting on a lot. Cheap crude is making for cheap synthetics, so that's one thing you've got. And then the other thing that is really kind of coming to the forefront a little bit is if you look at the areas that cut their winter wheat plantings, your Delta areas and your Southern Plains, that's where you can put cotton in. So the question now, or what I'm seeing in the Twitterverse and just having different conversations with people, is there is a discussion that a lot more cotton is going to go in this year in those areas. It's either going to be milo or cotton, and in the areas where the local milo basis has not been anything, and they're overwhelmed with that, there is talk that you could see an increase in cotton acres. So I struggle to see an upside. Aside from weather, the one thing that you could see is, like we talked about, if that El Nino carries on through spring and causes that active, cold, Southern Plains weather pattern to kick in, then you could see some planting delays, and that could give you a pop in the arm. But overall, again, take advantage of rallies.
The dollar. Final question.
Yeah.
Continuing to move downward, is this downward momentum here to stay, or are we going to bounce and shoot back up towards 100? Well,
China comes back from vacation on Sunday, so let's see what their headlines look like and what we've got going on there. Right now, we're kind of fighting. You got the tail that wags the dog with the oil market. You've got this idea that we have a global recession developing. Underneath that, though, and I don't really remember seeing anything like this before, where you have this global sentiment that's so poor. European central banks looking to introduce some stimulus. Bank of Japan is negative interest rates. You got other people talking negative interest rates. The U.S., that's kind of been blown out of proportion to me, the negative interest rate side. Granted, it has been left on the table, but the stress test portion of it, where everyone's like, they're telling people to be prepared for negative rates. It's a stress test. It's there to make sure that your bank's not going to fail if we end up in that sort of scenario. So it's could happen, but would I hold my breath that it does? I don't know. But we do have this churning sort of, is the U.S. okay? Which realistically, from a deficit standpoint, et cetera, we may not be. But if we're the best house on the block,
it's all relative.
Exactly. Yeah. So I think you're going to see some continued volatility. The sad part is we went to October lows this week and didn't really see much of anything on the grain side. So I think we have to see a confirmation of lower moves, and then an increase in export sales announcements and things like that before we can see the dollar really influence commodities to the upside.
Give us some wind back in our sails.
Yes.
All right. Well, Angie Setzer, thanks so much for joining us. Really appreciate your thoughts. We can find you on Twitter at Goddess of Grain.
Yeah.
All right. Thanks to all of you for sending in your questions via Facebook and Twitter and email. We encourage all forms. Please look us up, and if you have a question, send it over to us, and we will get expert analysis right to you. Thanks for watching, and have a great week.